Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To start this week's outlook, the Australian dollar's demand on Friday is slowly diminishing after it took a daring challenge to the upside, prints a high of 75.89 and still short of challenging the level of 76 cents. Since the rejection of 76.05 high, we have seen the market plummet to a low of 75.21 before staging a short recovery. From the technical pattern here, you can see that the stochastic is failing to show any kind of support of a recovery. Although the MACD is still on the slight bullish case, I do view any advances towards 76 cents as a sell opportunity, as I believe the market will initially take the challenge back towards 75.05. If we see a break beneath there, then this puts the journey further southwards to the broader target of 75.85 and reassess from there. But the bulls were crushed on Friday after the market at 116.60 as the market recoups from the heavy sell-off with the US to fresh highs of 6 months. The fact is that we could see a short-term recovery. On Friday, we did see a low posted of 116.44. And now, as you can see, the market is staging a slight recovery with bullish divergence. Looks towards the challenge of 117.1525. A break above there will give further scope to the upside and a slightly weaker start for the US dollar to 117.75 to 118.60. But a little bit of caution, because the fact is that we do have non-farm payrolls this Friday and the market could stage quite a choppy price action between the bulls and bears. The Bureau of Labour Statistics will release its report for May on Friday at 10:30 Sydney time, with the economists believing that the fact that we are looking for a forecast of 190,000 Ks in new jobs in May, while unemployment rate is anticipated to remain unchanged at 3.9%. Wages, however, are seen marginally higher from the 0.1 April soft reading to a forecast of 0.3, indicating a possible increase to inflationary pressure. It is still viewed that the June meeting with the Fed will hike rates 25 basis points, so the dollar should still show potentially further strength. But at the moment, for the start of this week, there is a little bit of divergence there, so we'll see how strong the bulls can play out today. The US is actually off today in observance of Memorial Day, so it could be a slightly slower start. The dollar yen still a little bit disappointing in terms of the bullish case after breaking the 110.10 support last week, which was the broad uptrend, is now showing further threat to the downside with 108.95 to possibly down to 108.45 before any initial call to a buy. We still need to see further confirmation to the upside to support a bullish case, and it is from 109.85.95 break that would give us a further upside move to 110 to 111. But until we get that, then the risk is still towards the downside. Well, we had Mark Carney speaking over the last few days last week, and he came out and said that his view that was he was ready to act if the UK faces disorderly Brexit. The Bank of England governor said that he signalled that they would be prepared to cut interest rates or even freeze plans of increasing them in order to support jobs and economic growth should Britain be plunged into a disorderly Brexit exit. So the market is being very cautious in the up-and-coming speeches that will be presented between Europe and also the UK. My strategy at the moment is to buy dips, and sub 133 is towards 132.40, 45 as a buy zone. I keep a 30-point stop under there, purely for the fact is that the market is getting extremely oversold. And as from the euro, you can see there is some divergence here with the pound also. So we could see a rise up towards 133.45 and even up to an objective I'm holding on the buy of any dips to 134.45. Well, the gold took the challenge, as you can see, to the upside, but didn't quite break the initial level of 1,306. And it would seem that failing to pull the bullish trigger level is actually slipped back underneath the 1,300 support level. Behind this view is the fact is at the weekend, North Korean leader Kim Jong-un and South Korean President Moon Jae-in had an unannounced meeting. Mr. Moon said that North's leader had again made it clear his commitment to complete denuclearization of the Korean peninsula. Mr. Kim later spoke of his fixed will that the summit should go ahead. On Sunday, President Trump tweeted that it would help the North achieve its brilliant potential. So we'll see how that all turns out. Technically at the moment though, I'm looking for a pullback to 94 after the rejection from the 1,306 challenge. Silver also is retreating, as you can see, and now looks back towards the support, now seen around 35. It is viewed that as we get closer towards the $16, 15.20, I'm a buy, and I don't expect to see the market sustain, but we're still continuing in this range of 16.15 to 16.85 at the moment. And rounding off with oil, as you can see, the market is plummeting. On Friday, it lost 4.5% of its value, crushed the 69.5 support, and now looks towards its uptrend. If we go to the weeklies, you can see clearly comes in at $65 a barrel. I do expect to see the market stage some recovery from there. It's only $1 away. Reason fact is we're really oversold, and we are at this point showing further concerns to the sell-off if it fails to bounce from there. What began this is the fact that Saudi Arabia and Russia are going to push for lifting production later in the year. It seems that the total of a boost in production from OPEC and non-OPEC countries could add up as high as $1 million a barrel to meet the shortfall in supply from Iran and Venezuela. So from these announcements has put a bit of a stir in the market, and you can see clearly that my view was the fact we weren't going to sustain above $72 because we didn't get confirmation. So let's see how it plays out from there. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoyed the wonderful start to the new week.